Welcome to our channel. Today we'll be talking about the history, evolution, challenges, and future of microfinance. This is a comprehensive exposé and documentary guide on the global development of microfinance. Introduction. Microfinance is one of the most important financial innovations in modern history. It was designed to provide financial services to low-income individuals, market traders, rural farmers, artisans, and small business owners who lacked access to traditional banks. Microfinance includes small loans, savings, insurance, money transfers, and digital financial services. One of the most significant financial developments in contemporary history is microfinance. It was created to give low-income people, market vendors, small company owners, artists, and rural farmers who didn't have access to traditional banks, financial services. Small loans, savings, insurance, money transfers, and digital financial services are all considered forms of microfinance. Microfinance is not a new phenomenon. Informal microfinance has been around for hundreds of years. In almost every region of the world, people have historically organized organizations to pool their resources and lend money to one another for a variety of events, including business, weddings, funerals, and other occasions. Time-honored programs include the Chit Funds in India, the Hui in China, the Artisan in Indonesia, and the Paluagan in the Philippines. Pawning is another. Originally funded by donated resources and offering interest-free loans, the so-called Irish loan funds first appeared in the 1720s as charitable organizations. However, financial intermediation between savers and borrowers quickly took their place. Weekly installments were made on short-term loans. Repayment was enforced by peer monitoring. Germany's credit cooperative movement, which started in reaction to famine in the 1850s, is where modern microfinance originated. Raiffeisen's farmer cooperatives and Schulze-Delitzsch's Volksbanken are two examples that are still in operation today. Finance in Europe. The roots of microfinance date back to the 16th and 17th centuries in Europe. The Irish loan funds emerged in the 1720s as charitable institutions that provided small loans to poor people without major collateral requirements. These funds became highly successful because they focused on trust, repayment discipline, and community responsibility. In Germany, during the 1800s, Friedrich Wilhelm Raiffeisen and Hermann Schulze-Delitzsch introduced cooperative banking systems for farmers and craftsmen. The German government created the Sparkassen, or savings banks, to organize and safeguard the public's tiny deposits. Approximately 50% of banking assets in Germany are currently held by these erstwhile microfinance organizations, which serve about 90% of the populace. The Grameen Bank, the most well-known microfinance organization in the world, is located in what is now Bangladesh. The British brought cooperative credit societies to colonial India in 1903. Many nations engaged in development finance following World War II, directing and subsidizing credit to particular target groups. Nevertheless, a large number of these banks and initiatives failed. The Grameen banking method was created in Bangladesh in 1976. This marked the start of modern microfinance. Its fundamental tenet was, the impoverished are bankable, and microfinance is financially sustainable. Numerous organizations adopted Grameen's group-based microfinance model. In a similar vein, an NGO named Finca created village banking in Latin America. The Bank Rakyat Indonesia, BRI, is another significant success. Up until 1983, state banks dominated Indonesia's financial industry, interest rates were controlled, and the opening of new banks and branches was prohibited. The century-old BRI was the principal provider of subsidized agricultural financing. Repayment rates remained between 40% and 50%, since there were no incentives for small farmers to make repayments or for BRI employees to enforce financial discipline. The new BRI management made the decision to commercialize the units into self-sustaining profit centers following the deregulation of interest rates in 1983. Since then, savings mobilized have consistently surpassed outstanding loans, and the new microbanking division has been making enormous profits annually. BRI is an example of a commercial bank that has successfully undergone reform and downsizing. If you've so far enjoyed this video, kindly subscribe to our channel to receive engaging contents from us. By doing so, you support and encourage us in bringing more educative and engaging contents. This video is sponsored by Leon Consulting Limited, a microfinance consultancy company experienced in training, recruitment, and consulting. Engage them for your microfinance consulting needs. The rise of modern microfinance. Modern microfinance gained global attention through Professor Muhammad Yunus and Grameen Bank in Bangladesh during the 1970s. Yunus discovered that poor women needed only small loans to improve their businesses and escape poverty. Grameen Bank introduced group lending systems, weekly repayment structures, and lending without collateral. In 2006, Muhammad Yunus and Grameen Bank won the Nobel Peace Prize. Microfinance changed from charitable lending to a commercial financial sector by the 1990s and 2000s. Big organizations like BRAC, Compartamos Banco, SKS Microfinance, Equity Bank, and Banco Sol grew internationally. Due to the enormous underserved markets and strong payback rates, investors started backing microfinance firms. 3 significant initiatives have been established since then: the Social Performance Task Force, the SMART Campaign, and Microfinance Transparency. The intense debate surrounding mission drift and the impact of microfinance has refocused the microfinance industry on the issues of responsible finance, customer protection, and social performance management. Microfinance Transparency officially closed its operations in March 2015. However, pricing tools and reports are still available on their website. In 2013, the first MFIs in Bosnia and Serbia were certified by the SMART Campaign. In 2011, the Principles for Investors in Inclusive Finance, PIIF, were developed by a group of institutional investors with the aim of contributing to economic development and entrepreneurial activity by investing in inclusive finance. Commercialization and global expansion. Compartamos Banco in Mexico became one of the most famous microfinance institutions to launch an initial public offer in 2007. SKS Microfinance in India also launched an IPO in 2010. These IPOs generated global debates about whether institutions serving poor borrowers should prioritize profit-making. Banco Sol in Bolivia in the year 1992. For the first time ever, MFNGO was transformed into a licensed bank, allowed to take public deposits. Many other NGOs followed this path of transformation. In the 1990s, a new generation of MFIs emerged in the former communist nations. The Greenfield model, in which microfinance institutions are established from the ground up, is prevalent here. Probably the most well-known example of this tactic is ProCredit Bank. Under World Bank sponsorship, the Consultative Group to Assist the Poor, CGAP, was founded in 1995. With an emphasis on commercial microfinance, it is a global think tank and service provider for the microfinance sector. To improve the transparency of the microfinance sector, CGAP founded the online platform Microfinance Information Exchange, 2002. It offers immediate access to data on the social and financial performance of almost 2,000 MFIs worldwide. The Andhra Pradesh crisis and borrower suicides. One of the most controversial periods in microfinance history occurred in Andhra Pradesh, India, around 2010. Rapid expansion and aggressive loan recovery practices reportedly pushed several borrowers into severe debt pressure. Reports of borrower suicides attracted international criticism and led to stricter government regulation. The crisis exposed dangers such as overlending, multiple borrowing, and poor customer protection. Prior to all of this, the Indian microfinance company SKS raised more than $100 million on the stock market. At the same time, a controversy surfaced in the Indian state of Andhra Pradesh, where a number of MFI borrowers killed themselves, purportedly because they were unable to repay their loans. The problem of mission drift gained prominence due to occurrences in India and other nations where MFIs made enormous profits as consumer over-indebtedness sharply rose. Furthermore, some experts question the high interest rates paid to the poor, while others assert that there is little proof that microcredit actually helps the impoverished leave poverty. These critics want the government to have more authority over the microfinance industry. Microfinance in Africa and Nigeria. Across Africa, millions of people operate within the informal economy and often lack access to conventional banking services due to limited collateral, low incomes, or geographical barriers. Microfinance institutions bridge this gap by offering innovative, community-focused financial solutions that support business growth, household income generation, agricultural development, and local economic resilience. As digital financial services continue to expand, microfinance is becoming increasingly accessible through mobile banking, agent banking, and fintech partnerships. In Nigeria, the microfinance sector has become an integral part of the country's financial system. Established under the regulatory oversight of the Central Bank of Nigeria, CBN, microfinance banks, MFBs, are licensed to provide financial services to economically active individuals and small businesses that are underserved by commercial banks. These institutions contribute significantly to national economic development by mobilizing savings, extending credit to productive sectors, promoting financial literacy, and supporting government initiatives aimed at reducing poverty and expanding financial inclusion. Despite its significant achievements, the Nigerian microfinance industry continues to face challenges such as high operational costs, loan delinquency, portfolio quality deterioration, fraud, cybersecurity risks, regulatory compliance requirements, and macroeconomic pressures. These challenges underscore the importance of strong corporate governance, sound credit administration, effective risk management, robust internal controls, and prudent portfolio management. Today, the future of microfinance in Africa and Nigeria is being shaped by digital transformation, data-driven lending, artificial intelligence, mobile money, and innovative financial technologies. Institutions that successfully embrace innovation while maintaining strong risk management practices will be better positioned to achieve sustainable growth, improve portfolio quality, and expand access to financial services. As the sector continues to evolve, microfinance remains a cornerstone of inclusive economic development, empowering individuals, strengthening communities, and fostering long-term financial resilience across the continent. Failed and liquidated microfinance institutions. Many microfinance institutions globally have failed because of poor management, weak risk control, fraud, and economic instability. Integrated Microfinance Bank in Nigeria became one example often discussed regarding operational challenges and institutional weaknesses. Several institutions in Africa, Asia, and Latin America were liquidated or lost operating licenses because of regulatory violations and poor financial performance. However, the sector has also experienced numerous institutional failures caused by weak corporate governance, poor credit risk management, fraud, inadequate capitalization, regulatory non-compliance, and economic shocks. The failure of microfinance institutions, MFIs, provides valuable lessons for regulators, investors, management teams, and employees on the importance of sound risk management and prudent operational practices. Several African countries have experienced the collapse or liquidation of microfinance institutions due to poor governance, liquidity crises, and weak internal controls. To mention a few, we have Dandamutande Credit Company in Zimbabwe, one of several institutions affected during Zimbabwe's economic instability in the 2000s. Hyperinflation, poor portfolio quality, and liquidity shortages severely affected many microfinance providers. Microfinance sector crisis in Kenya. Kenya has experienced closures and restructuring of several deposit-taking microfinance institutions over the years because of liquidity problems, governance failures, and capital inadequacy. Lessons: technology alone cannot replace sound governance. Strong board oversight is essential. Microfinance challenges in Uganda. Uganda has seen several small community-based microfinance institutions close due to poor lending practices, inadequate capitalization, and high default rates. Lessons: credit appraisal remains the foundation of portfolio quality. The failed microfinance bank's history in Nigeria. Nigeria's microfinance banking industry officially began after the introduction of the microfinance policy, regulatory, and supervisory framework by the Central Bank of Nigeria in 2005. The policy transformed many community banks into licensed microfinance banks, MFBs, with the objective of expanding financial inclusion. While the industry has grown significantly, many institutions have failed because of weak governance, poor risk management, fraud, insider abuse, inadequate capitalization, and failure to comply with regulatory requirements. In 2020, the Nigeria Deposit Insurance Corporation began the liquidation process for 42 failed microfinance banks after their licenses were revoked by the Central Bank of Nigeria. Reasons included prolonged inactivity, insolvency, and regulatory breaches. In one of the largest regulatory actions in the history of Nigeria's microfinance sector, the Central Bank of Nigeria revoked the licenses of 179 microfinance banks. Reasons included failure to operate for extended periods, insolvency, failure to meet licensing conditions, failure to submit regulatory returns, persistent regulatory non-compliance under the Banks and Other Financial Institutions Act, BOFIA. Common causes of microfinance institution failure across Africa includes recurring causes like 1. Weak corporate governance, 2. Poor credit appraisal and excessive loan defaults, 3. High portfolio at risk, PAR, 4. Fraud and insider abuse, 5. Weak internal controls, 6. Inadequate capitalization, 7. Liquidity shortages, 8. Poor operational risk management, 9. Regulatory non-compliance, 10. Ineffective board oversight, 11. Poor strategic planning, 12. Macroeconomic instability. Digital microfinance and financial technology. The microfinance industry is increasingly digital. Mobile banking, fintech applications, digital wallets, artificial intelligence, and automated credit scoring are transforming the sector. Examples include M-Pesa, Tala, Branch, Fairmoney, PalmPay, and OPay financial services. Digital microfinance has improved financial access, but has also increased concerns about cyber fraud, overborrowing, and data privacy. Benefits of microfinance. Microfinance has contributed to poverty reduction, women empowerment, financial inclusion, job creation, entrepreneurship development, and rural economic growth. Many borrowers have used microfinance loans to grow businesses and improve their living standards. Problems and criticisms. Critics of microfinance argue that some institutions charge excessively high interest rates and use aggressive recovery methods. Problems such as loan recycling, over-indebtedness, political interference, weak consumer protection, and poor financial literacy continue to affect the industry. The future of microfinance. The future of microfinance will be driven by digital transformation, artificial intelligence, agent banking, blockchain systems, and embedded finance. Future institutions must balance profitability with ethical lending practices, customer protection, and financial sustainability. Since the 1990s, the microfinance industry has copied many features of the traditional banking sector. The first venture capital fund dedicated to microfinance, ProFund, was founded in 1995. Other funds followed soon. In 1996, MicroRate, the first rating agency of the microfinance industry, was established, and microfinance investment vehicles, MIVs, soon started to mushroom. Although this growth slowed down after the onset of the 2008 global financial crisis, impact investment funds are still doing well. CGAP reported the results of annual surveys conducted by JP Morgan and GIIN. USD 8 billion had been committed by impact investors in 2012, increasing from USD 2.5 billion reported in 2010. Microfinance investments made up more than 72% of the fund assets under management. Another important landmark in the history of microfinance was the initial public offering, IPO, of the Mexican Banco Compartamos in April 2007. The IPO of its stock was 13 times oversubscribed and raised USD 467 million for the microfinance bank. The huge demand was fueled by the exceptional growth and profitability of Banco Compartamos. Mainstream international fund managers and other truly commercial investors, not socially responsible investors, bought most of the shares. However, the Compartamos case raised serious concerns in the microfinance industry, in view of the huge profits it produced for Compartamos shareholders, amongst them social investors such as Action International. In 2010, another IPO caused heated discussion: microfinance and financial inclusion. The G20 have declared financial inclusion among its priorities and has taken concrete actions such as promoting the incorporation of financial inclusion perspective into standard-setting bodies like the Basel Committee on Banking Supervision and the Financial Action Task Force. Also, central bankers and ministers of finance from over 95 countries are participating in the Alliance for Financial Inclusion, a global network of financial policymakers working to advance inclusion. While the hot debate about mission drift is going on, interesting innovations have been developed in the microfinance industry, one of the most promising being mobile phone banking. In Kenya, the mobile phone payment service M-Pesa was launched in March 2003. As of November 2011, M-Pesa had over 14 million subscribers and well over 28,000 agents across the country. The service has already expanded into other countries. In conclusion, the history of microfinance is a story of innovation, opportunity, controversy, and transformation. From the Irish loan funds to Grameen Bank and today's digital lending platforms, microfinance has changed the lives of millions worldwide. Despite crises and institutional failures, microfinance remains an important tool for economic development and financial inclusion. If you've enjoyed this video, do well to subscribe to the Microfinance Arena channel. We are sure to give you educational contents on microfinancing. Our other videos on microfinance are found below in our description box.